Yes.
Okay, great. So good afternoon, everyone. Welcome to our webinar on how to build a winning pitch deck presented by Early Growth Financial Services. My name is Oren Hahn. I'll be your moderator and your guide through the webinar today. A quick couple of notes before we get to our webinar. It's scheduled to last approximately 60 minutes with time for a Q&A at the end of the presentation. We have a questions panel within your GoToWebinar console. You can use that panel to answer questions throughout the presentation. We will jump in and answer those questions as appropriate during the deck, and we will answer as many as we can afterwards during the proper Q&A period. So again, that's the questions panel in your GoToWebinar console. It's up in the right. Before we jump in, I want to introduce our presenters today from Early Growth Financial Services, Sirk Roh. He's a consultant CFO based out in the Bay Area. Sirk, can you take a moment to say hello?
Yeah, hi everyone. Thank you very much for taking time to join us on this webinar. I thought I'd just start with just a little bit of information about Early Growth Financial Services. We are an outsourced accounting and financial services company we say that we work in the SMB space. Having started here in the Bay Area of California, SMB typically means tech startups, and that is kind of our bread and butter. We provide 4 types of services. We do, on an annual basis, we do corporate tax returns, we do 409A valuations and other company valuations for when you're giving stock options to your employees. And then our bread and butter really is our consulting services, where we provide both accounting level services, the day-to-day, the week-to-week, the month-to-month accounting and bookkeeping, as well as higher level, call it VP of Finance / CFO level services for all of our clients who don't want to or don't need to be hiring people internally. So we provide that kind of expertise, but on a go as you go, grow as you grow basis.
Excellent. And we have some examples of some of the companies we work with. There, you'll see at the top there, as well as a quote from our founder and CEO, David Ehrenberg. And with that, Sirk, would you like to get into the nuts and bolts of putting together your pitch deck?
Let's do it.
Okay, here we go.
So what we're going to be talking about today is just a high-level overview of what your pitch deck should look like, what it should include, maybe what it shouldn't include, or what it doesn't have to include. We'll talk about these slides that you'll want to have as part of your pitch deck, and then at the end we'll maybe even have a quick discussion about kind of beyond the pitch deck and maybe some tips on how you go about actually doing the pitch. So with that, basically you want to, what the pitch deck is supposed to be. It's supposed to be a part of a group of documents that you have and you're ready to allow you to fundraise, right? And so there's 3 main things that you're going to want. You're going to want to have an elevator pitch, which is kind of like your classic. If you're stuck in an elevator and you're going up 5 flights of stories in an elevator and you have 30 or 60 seconds and someone asks you, what do you do? Then this is kind of your pitch where you're able to describe what you do, what your company does, and what your vision is in that short of a time frame. So that's something that you should have kind of at the tip of your tongue, ready to spout whenever someone asks you that question. The second thing is kind of an executive summary, which is more of like a 1 to 2 page document with kind of the salient points, right, of your business. And that's probably the first thing that any investors or any potential investors are going to want to look at, just to at a glance understand kind of where you're at, what you're about, and what you're trying to do. The pitch deck is the last and kind of the most robust piece of this, and this is basically what you're going to be presenting to potential investors when you get in front of them to really pitch your idea and your company and the investment theme, and so that's kind of what we're going to be focusing on. And so here is this is kind of the landscape. This is an example of maybe 12 slides that you would use. To the right, you can see a set of of slides that different investors and different people would suggest you use. And so you can see in here that it's really somewhere between 10 to 12, call it 10 to, at an absolute most, 15 slides that you're going to want to use. And, there's obviously, depending on your company, what you want to communicate, how you want to communicate it, you're just going to want to, figure out which of these you want to include. And the one thing that I caution our clients against is really putting too much information into your pitch deck, right? Because it's really meant to be a source for you to be able to have a discussion, to be able to present your ideas, to create a question and answer discussion with investors, and then obviously to follow up with any kind of detailed request for information that comes along. And so, just try to keep it simple. And with that, let's kind of go to the next slide, which is just talks about kind of Guy Kawasaki's rule. Or if you could move forward one slide, that'd be great. So Guy Kawasaki is a well-known investor out here in the Bay Area, and he wrote a book called Art of the Start several years back, many years back, and he basically had 3 simple rules when it comes to preparing a pitch deck, and that basically is the 10-20-30 rule. And in a nutshell, it basically says, try to limit it to 10 slides, keep the presentation to 20 minutes, and use 30-point font. And I think that's obviously, this is a this is a set of suggestions, but it's a good starting point. And usually I get the comment from someone who's never done this to say, holy cow, I can't put my company in 10 slides. I can't present my company in 20 minutes, and I have too much information to put my font in 30 font, and to that, I usually say, in that case, I think you're misunderstanding what investors want to see in a pitch deck, and you're trying to convey too much information in a pitch deck, when really the bulk of the information that you're going to be divulging is going to be hopefully in future follow-on calls and meetings to just discuss in further detail what the investment idea is. And so again, this is meant to be just as an elevator pitch is meant to be a kind of a teaser for them to want to take the next step. And the same thing with an executive summary. When someone sees an executive summary, it should be a sales tool, a marketing tool, so that the investor again wants to take the next step. And the pitch deck is really meant to be a tool for them to whet the appetite of the potential investor to want to take the next step, have the meeting with you, and to do further due diligence, because the investment theme after you pitch the idea is compelling to them. Okay, so with that, then, if we can go to slide 1, this is going to be, and actually just one final point on the 20 minutes. People ask, 20 minutes, that seems like such a short time, and in typical first meeting presentations with investors, you're going to be given a 30-minute time slot. And that's why we say you want to limit the presentation to 20 minutes so that there is time for questions and answers, discussions. And obviously you need to know the information cold so that you can talk to it at a detailed level if the questions and discussions lead in that direction. But you really, if you try to, if you assume that you're going to be presenting for 30 minutes, you may not even be able to get through the entire presentation. So try to limit the pitch and the slides to a 20-minute presentation. Okay, so slide 1 is just a title, and this is where you're just going to, this is what is going to be splashed on the presentation when you first start presenting, and the investors are all sitting down and grabbing their coffees and danishes and sitting down waiting for the presentation. And you're just going to want to have your company name, your name, any information, and then to the extent that you have a logo or a tagline, this is the place to put it, so that hopefully it catches the imagination and the intrigue of the investor. And on the next slide, you can see just a very, very simple example of that.
I believe that brings us to our next chapter, problems and opportunities.
Yeah, and this is kind of really where we obviously start getting into the nuts of it, and what you want to. So this is where we introduce the idea of what the problem it is that we're trying to solve. You know, the history is littered with companies that had a great, elegant solution, but a very, very small problem. Or not a painful problem that they were trying to solve, and were not successful. So the idea is to talk about the problem that that you've experienced personally, or others have experienced personally, and the reason why your company is doing what it's doing. And if it's something that is relatively well known, if it's a consumer-based problem, if it's something that's widespread that people are going to be aware of or know about pretty easily, then it can be very, very simple. If it's something a little bit more esoteric, you might need to spend a little bit more time in describing it. But I would try to keep it as simple, the actual slide, as simple as possible, and then speak to that when you are presenting.
And we have a really nice example of that in the next slide.
Yeah. So here's here's the problem slide for Airbnb, which is basically that price is an important concern for customers. And the hotel is just a place to stay and doesn't give you additional information about where you're at, and that there was very little infrastructure in terms of actually hooking up people with rooms. So again, you can see that this is a very, very simple slide. It conveys the problem at a very, very high level, and explains to the investor kind of what we're trying to solve.
And that allows us to segue into the next part, the value proposition. That's really the brilliance of where a company gets to shine, isn't it?
Yeah, that's exactly right. So this is where we start the introduction. So there's 2 slides on this, right? There's 2 slides on kind of what we're doing, the value proposition slash or the technology or the solution that we're proposing is where we talk about how we're looking at the solution, and how our product, our service, our company is going to solve the problem that we identified in the previous slide. And so if we go to, thank you, Oren. So here's a very, very simple, easy to understand solution slide where we basically say that we can save money for the traveler, we can make money when we're hosting, and we're also able to share information about the culture. This is not, so there's like I said, there's 2 slides here that we're going to want to talk about when it comes to the solution. One is at kind of the highest level, making sure that people understand that the mixing or matching the solution to the problem that we have is what we want to introduce the idea. The next slide, to the extent that we have it, I'm sorry, this is just another example of a different type of solution for GoSally. And again, there's probably different ways that you're going to want to convey information. If it's simple dialogue or simple words that can be used in a bullet point, that's fine. I'm a huge fan of using graphics, charts, diagrams. I think that those work a lot better in many cases, and to the extent that you can introduce ideas in a graphic format, then I highly, highly encourage that. And so here is another solution slide.
Now, visuals can be so important, especially in a pitch deck.
It is, and really, the idea here is, again, that it should be easy to grasp, right? The last thing that investors want to do when they're sitting there listening to you present is to be reading off a slide and reading bullet points, because that's not where it's just not that compelling, at least in a presentation format. You're going to have already probably presented some of these ideas in your executive summary in words, and so to the extent that you can use diagrams and graphics in your pitch deck, that'll go a long ways.
And that brings us to our next part. Once you present the solution, demonstrating the underlying magic of what the company is going to do through that solution. If we could talk about that some.
Yeah, absolutely. And this is obviously a very, very key slide, right? I mean, all of these are key slides. When you're only presenting 10 or 12 slides, they're all key. But this is probably the key slide that you're going to want to talk about, and where you might want to allocate a little bit more time than 2 minutes to this slide. And that's basically the underlying magic, right? Any kind of advantage that we have, whether it's technology based, whether it's industry expertise, knowledge, experience, whether it's time to market, basically anything that gives us the upper hand, and that also is not only gives us an upper hand with regards to solving the problem, but also to the extent that we can demonstrate any kind of a moat, right? That we can use to protect our company in the future. Obviously, if we just have a first mover advantage, but the technology is relatively simple to introduce and to produce, then obviously there isn't that much of an advantage. So here is kind of where we're going to want to talk about what we have, the technology that we're using, how far we've come. Obviously, if we're going to be doing any kind of a demo of our product, a really, really short demo that shows kind of what we can do or what our product does, then this is the time to do it. And in fact, I think that most presentations now, if you're trying to fundraise at a stage of the company where we have working prototypes, where we have technology and that you can show off, then this is where you would want to demo that capability to your investors.
Part of that capability, I know, is often in demonstrating any patents. That we have that on our next slide here.
Yeah.
What
so
makes up the magic?
This would be an example of what you would show. Anything that puts us into a good light with investors with regards to what we've been able to produce, any secret sauce that we have, any patents that we have filed, basically anything that that is particular to us and what we've done, right, as opposed to what others are doing or what the industry is doing now. To the extent that we have differences, then this is how you would show it. And so this is one example on more of like a high level product base. The next slide is one that is probably a little bit more detailed, and so this would be very, very much of a kind of a technology-based slide. And quite frankly, I'm not actually that keen on this one, just because I think it's a little bit busy. But if we have a really, really technical solution and a technical secret sauce, then we want to show that, right? And however we show that, I urge us to try to keep it as simple and high level as possible, but it does need to be compelling, right? And so if we have a lot here that we want to show, then if we need to get a little bit more detailed than what we might otherwise do, then I would encourage us to do it. And so this is an example here of a company called Audience Arc.
Excellent. And then after showing our problem and our solution, that's a natural segue into our next chapter here. Oh, how are we going to make money with this?
Yeah, I think investors are going to want to be interested in this, obviously, because they're, while it may sound great, and while you may have, some investors who really, really love technology or who love the idea, and want to invest in a new space or new ideas, clearly they're interested first and foremost in how that idea is going to turn into money down the line, right? So we need to be able to show how our business is going to make money. And obviously, some of again, this is going to depend a little bit more on particular to each company, the way that they're going to go about doing it, but explaining at a high level the way that we're going to actually generate business and turn our idea into cash flow revenue down the line is obviously key. And this is where, again, depending on the kind of company, you would want to show show different revenue streams both now and in the future. But who is our primary customer, right? Is it a B2B space or business to business? Is it a business to consumer space? Is it a SaaS model, meaning a software as a service model? Is it a hardware model? How are we pricing the product, right? Is it a one-time fee, and we have to go and generate new customers every single time we want to sell something? Or is it a recurring business, recurring revenue model where someone signs up and they use the service on a month-to-month basis or a year-to-year basis, and they pay us regular intervals over time? Obviously, this is going to be a key thing that investors are going to want to understand to be able to put some numbers behind the analysis to make sure that the investment that they make is going to turn into, hopefully multiple X's in return in the future. So here's
there's so many different business models at play these days. I mean, we have a few examples here, and then we have another slide after. I mean, between partners, as you mentioned, B2B, B2C, tourism. And our next slide, actually, I know is a popular choice, subscription-based, just to show some graphical examples.
That's right. Yeah, and I think both of these
are presentations these days.
Yeah, both of these are really, really good examples. If you go kind of to the first one, you can see that this company here has 4 potential revenue streams. That right now that there are 2 commissions, both from partners and from suppliers, that we're able to generate. And then later on, as our business is developed, we're going to have additional revenue streams in terms of setting up tours for both businesses as well as individuals. And so this shows at a very, very high level the way that we're going to make money. And then obviously, later on, we're going to show, what that revenue stream looks like and how we're going to generate it. The next slide is kind of a classic, kind of a service or usage model that we see a lot, right? Where we have, different tiers of service that people sign up for depending on, their needs. You call it like a freemium service where, when you're really, really small, you might be able to start using the service for free. But it's very, very limited in terms of the capabilities or the level of activity that you're able to use. And then as you grow, and as your needs grow, the customers' needs grow, then obviously they fall into higher and higher tiers of service, which obviously suggests higher and higher levels of revenue for the company.
Subscription models have certainly been very popular as of the last few years.
And also, just as an aside, just as an aside in terms of if we think about it from an investor's standpoint, right? I mean, and this is maybe a little bit outside of the presentation, but investors are really looking for kind of that recurring revenue, right? They don't like hearing stories of having to sell a new product every single time to a customer, to a new customer, and not having that customer come back and buy over and over and over and over again. That's a really, really tough model from an investor standpoint. And so, I encourage you, if you're looking at your business model, obviously you want to maximize revenue coming in. But to the extent that it's somewhat malleable and there's different options that we have in terms of pricing, to the extent that we can price in some sort of a recurring model, that's going to go a long ways towards capturing the interest of potential investors.
And in doing so, we've talked about what the problems and the solutions are as far as coming in. That brings us to our next one, the actual market opportunity that's available there. That's something that I know Guy Kawasaki doesn't include market size in his deck advice, but we feel it's important. If you'd like to talk about that.
Yeah, I think so. And again, this may not be critical. This may not be a critical slide for your company, but in most cases, we find that talking about the market opportunity, both in the immediate future as well as in a little bit down the line, kind of sets the stage, right, for investors to understand what the potential is. If you're preparing a pitch deck that you're sending out to potential equity investors, so whether it's at an early seed stage or later Series A, Series B, and later, then obviously there's got to be a pretty compelling opportunity, because investors are not going to invest in a kind of like a lifestyle size company, right? Where you can make a little bit of money and you can grow the company 10 or 20% a year, and it's a nice lifestyle. They're looking for obviously mega growth opportunities, and so unless it's very, very clear what the market opportunity is, then you're going to want to describe it, and make sure that that the investor understands what the opportunity is. And quite frankly, the investor is going to want to know that you, as the founder, is also understands the opportunity and kind of how you're approaching the market and what you think and make sure that it seems reasonable, in their mind. Right, so there's two parts to it. One is in explaining to investors, just making sure that they understand what the size is, and also to address the question of the investor's confidence in you as the founder, that they're going to be investing in, that you understand what the market is, and that you're not being a little bit too pie in the sky and kind of an entrepreneur. But we talk about these acronyms: TAM, SAM, and SOM, which is the total available market. SAM, which is a serviceable addressable market, and then the serviceable obtainable market. And we encourage you to depending on the stage of the company, be really, really targeted, right, in terms of what you're going after, right? I mean, obviously, depending again on your company, you may be going after a pretty big market immediately, but it's usually pretty hard for a small company to kind of attack a huge opportunity, right? What you want to do is you want to take the entire market, and you want to get a small piece of it, right, and say, hey, I'm going to attack this market, really, really be targeted and focused, take the amount of money that we're going to be raising in this round of financing, and really go after that market and be successful, and then obviously increase the serviceable market as you grow, or as we grow. And as we become successful in one market, we might be able to attack another.
So we have a visual of how that breaks down on our next slide, just to sort of narrate what you're saying, or visualize what you're sharing.
Yeah, and so the classic example that I've used in the past to describe this is kind of the sushi market, right? So the worldwide sushi market might be I don't know, $10-20 billion a year. But if you're opening up a sushi restaurant in downtown San Francisco, for example, obviously the serviceable obtainable market is much smaller, right? It's within some radius of your restaurant, and so that's kind of what you're going after. Now, to the extent that, again, looking out further, what you would say is, again, using the very, very simple case of the sushi restaurant is, hey, look, we're expecting to be successful. Here are the reasons why we're going to be successful. Maybe we've already, we've been a sushi chef in Japan, and we're going to open up, and then we're going to open up a restaurant in Napa Valley, and then obviously increase in Los Angeles. But that's kind of what the message that you want to send with this market opportunity of a very tight, serviceable, obtainable market, right, that we're going after initially. followed by, and hopefully what we really want to do is we want to have the investor be thinking, almost imagining, to themselves of what the potential might be as we address our first target market, and then expand our offerings, or expand our regions, or expand our industries into adjacent markets, and really be able to grow our business.
Excellent. And for that, we can also talk about what goes into acquiring customers.
Yeah, so this is obviously the next step, and obviously it's great to have these big markets that we're going after. It's great that we have an idea of how we're going to actually be able to acquire customers, and what our business model looks like. But ultimately, the investor wants to know that we have the right plan in place to actually acquire those customers, right? And so here's where we present the idea of our go-to-market plan. Maybe we're already in the market, we're already generating revenue, in which case we've got some statistics of how we're acquiring customers, whether it's through word of mouth, whether it's through social networking, whether it's through advertising, whether it's through Google searches, ad searches, whatever the different models of acquiring customers may be. This is where we're going to want to present it. And so, how do we go about acquiring them? How do we reach out to potential customers? How do we, get ourselves known outside? What does it cost? What does it cost to, get so many people onto our website, to view our website, and what percentage of the initial viewers? So how much does it cost, to have someone click over to our website through Google or other Google or Facebook or other places like that? Then once they're on our website, what percentage of those customers will actually click and try our service? And then ultimately, what percentage of the people who try us out will ultimately pay for it? That kind of detail really goes a long way towards, again, earning the confidence of investors that we know what it's going to take, right? We know what it's going to take to acquire customers, to keep customers, and what all the metrics are behind all that, so that we can feel confident in the upcoming financial projections that we're going to be presenting. And here's I think so before this one, Oren, there's a go-to-market strategy, and so here's again just an example of a slide that you would show, to how you would actually be able to attack a market space. And then the next one is this is again for that company Kangaroo, that tour company in Australia, and the different ways that we're actually going after our targets.
That's great. And go from that into how do we compete with others, and where do we stand?
This is this one I wanted to spend a little bit more time on competitive analysis, because we get we get discussions with clients about this a lot, right? And some of the questions we get are, or some of the comments that we get are, well, we don't really have any direct competitors. We're kind of in a new space, or there aren't really anybody who's doing what we're doing, which is one of the reasons why we think that we're a great investment opportunity. And I always encourage our clients to think a little bit larger than that. We have to show that there are competitors, right? So for a couple of different reasons, let's talk about that. First of all, if there really are no competitors in the space, then the question is going to be, why are there no competitors in the space? That means that there isn't a good enough or big enough market opportunity. Because if there were, we're not the only bright guys in this space. There are lots of entrepreneurs out there who are looking at different opportunities. There are lots of investors out there who are investing in different opportunities. If there truly is no competition, or there's very, very little competition, that's the question that's going to come up in investors' mind. Either that we are understating what our competitors, what the competitive landscape is like, or that there's no competition, or there's very little competition because there isn't a big enough market opportunity. So kind of keep that in mind. And yeah, our product or our service or our idea may be different, and it probably will be a little bit different than what others are doing. But that doesn't mean that there aren't competitors, or that there aren't potential competitors, or that there are people who are in the periphery of what we are doing. And so, you know, being upfront, being honest, and also being very, very down to earth about what the competitive landscape looks like is going to be important. You know, if you have targeted your investors properly, meaning that that you understand what their typical investment themes are, and that you've identified investors that would be good to send a pitch deck to, then they're already probably somewhat aware, right? They probably already have a partner who's investing in this space or in peripheral spaces, so they're going to be pretty knowledgeable about kind of what the landscape might be already, and it's in our best interest to be able to discuss it at a very honest level, and be able to explain why there is competition out there, but why we are so much better. And in that vein, there's typically two main ways that most companies present the idea of competitive landscape, and this is the first one. So this is what we would call the checkmark slide, right, where we identify the main features or the benefits or the factors that we want to that we think are critical to the success in our space, and then we list our competitors across the columns, and we check off what each company does or doesn't do. And of course the idea is that we do all of these, right, whereas our competitors are either lacking in certain areas, or haven't addressed them, or have missed some critical factor that we are obviously aware of and are addressing.
And then we have another example of how to present that.
Yeah, the second one is kind of the matrix, right? This is where we put a dimensional diagram on, and the idea is that in both dimensions, the horizontal and the vertical, the further you go up and to the right, the better the better the product or service is. And obviously we want to be in the upper right hand quadrant of this matrix, and depending this makes it a little bit, I think in some cases it makes it a little bit more challenging to use this diagram as opposed to the check mark. Because what you have to do is you have to really identify the two main things, right, that are going to be critical, the two dimensions that you want to present, and then be able to show why we're better than others. It could be cost, it could be complexity, it could be traction. It could, I'm not sure of all the things that it could be. Obviously, it's up to you as the entrepreneur, understanding of the company and the industry, to be able to present it. We find that in most cases, the check mark option is one that is favored by more companies than the matrix one.
Oh, we have a question as far as the matrix versus the check mark. You said that the check mark is more favorable. Are there particular cases where the matrix would be more favorable? Have you seen?
Yeah, absolutely. So yeah, that's why there's multiple options, right? I think for companies that are a little bit more robust, right? Companies that offer a little bit more of a robust solution, then I think you can use especially if it's a little bit more of a, what I would say, if you have an industry or a competitive landscape where you have many more smaller players, who aren't as far along, or we have a more robust solution, I think that that you can put like robustness or complexity or something like that into a matrix, and we may come out looking better. Whereas it's hard to put that kind of a factor into a check mark, right? If it's more, if our company or our industry is more focused on features, or we know that there are some things that our competitors are not doing well, and we can really identify those in a check mark, then I think that lends well to that kind of analysis. It's really hard without really looking at specific situations. And so I would kind of encourage you to really, look at your company and say, what puts us in the best light? Does it put us in the best light to be able to pick two dimensions and be able to kind of lump all of our competitors, into spaces where we come out looking better, or does it make more sense for us to do it in a checkmark format? I think that the only reason why that the checkmark format tends to be a little bit more popular is it's a little bit easier. It's a little bit easier to kind of identify, the main factors that we're trying to go after, and then be able to check those against, what our competitors are doing.
It does seem like there's greater clarity in the check marks for direct competitors. Although it seems like one advantage of the matrix would be looking at someone who's totally unrelated. I mean, like just thinking of the recent surprise this year in the grocery industry with Amazon entering, and how I couldn't even imagine that on a checklist, but in a matrix there might be room for illustrating that possibility.
Mm-hmm.
So, but on to our next topic, management teams, and then really shining that, what should be shown on there.
Yeah. So this is critical. So if you think about it from an investor standpoint, the idea that you have is probably not new. Like I said, if there's a big enough market opportunity, there are probably others who are addressing it, right? Either now or there are people who are looking into the problem and coming up with their own solutions, right? And so the product, the product that we're offering may be pretty keen right now. My guess is in almost all cases that we're going to pivot as a company, right? We're going to pivot. We might, as time goes, technology might change, the market conditions might change, and we may pivot, in terms of how we go after customers. The management team, I'm sorry, is key, right? That's what they're investing in. That's what investors are investing in. They're not investing in the product. They're investing in the company, and they're investing in the team. And so, we have to show why we are the team that is going to be able to address this market, better than anyone else, and why our team is the one that they should be investing in, and not somebody else who's doing something very, very similar. And so, whether it is, specific industry expertise, experience, whether it's technical expertise that we have, we want to be able to present our team in the best light. And so, here's an example of, 5 kind of key guys for within the team in terms of sales, software, and then the CEO and COO. And in this case, they've also added a key technical advisor who's also very, very knowledgeable and maybe even influential in this market space, and expect that there's going to be that this is going to be an area where investors are going to want to dig a little bit deeper if they're interested in investing in the company. I get this question, especially at early stages, from either founders who are looking for a first round of financing, and they're putting together their first pitch deck, and they say, well, I don't really have a team. It's me and one other person, and the idea is that this first investment is to build out a team. Is it okay to have just a sole founder as opposed to a founding team? And I know that investors are not that keen on sole founders as opposed to founding teams. And the reason is because there's more risk, right? There's more risk when they're investing in one person as opposed to a team of people who have already put some time, energy, their life into producing something. And so, if you're a sales and marketing guy and you understand the space really, really well, obviously I encourage you to team up with a technical person, who can talk to and work on the technical piece of it. If you're a technical person who really understands kind of technology, and you're developing a solution and you think that it's a really keen solution to a problem that you see, then team up with somebody who is in the industry, right, that you're going after. And really at least have a minimum of 2 people, both a technical team as well as a kind of an industry / sales and marketing person, that you can present as a team to go up to go and talk to investors.
It's so important to be able to show that you've been collaborating with someone, especially which brings us to our next topic as far as looking forward to projections. If you can show that you've been working collaboratively with someone, then at least you have the mindset to be looking forward and forecasting.
Near and dear to the hearts of us CFOs, obviously, putting all of that information, right? Putting the market opportunity, the serviceable, obtainable market, and then in the future, into bigger and bigger markets. Putting our customer acquisition strategy in place. Marrying that with kind of the resources that we need to make it happen, right? So the people that we need to hire, the resources that we need to bring on, any fixed assets that we need to bring on, advertising dollars that we need to spend. Basically, all of that, right, goes into preparing a financial forecast that we're going to be driving towards, right? And so, we push for 3-year forecasts. Depending on how much history we have, we may be able to go out a little bit further, but for most VC raises, looking beyond that is challenging, right? It's hard to really back that stuff up beyond 3 years, even 3 years. I guarantee you that any 3-year plan that we put together, if you look back, 3 years from now, and if you look back at this plan that we put together today, it's going to look very, very different, right? So 3 years, but having a plan of where we want to be 3 years down the line, the resources that we need, kind of the bottoms up build in terms of the revenue, the markets that we're going after, the percentage of the market that we're going to be able to gain, and then what that means in terms of total revenue and cost of goods sold, and then the expenses that we need to incur to be able to support that is obviously critical. And from a presentation and a slide perspective, we encourage you to, again, don't put a big eye chart spreadsheet. As much as I love spreadsheets, this is not where you want to be presenting it. So a simple graphic like this one, would be the what you want to show at this stage. Obviously, you have the backup in the spreadsheets to support it in detail. But this is kind of what you want to show, right? And I think something simple where you show the revenue growth, you show any kind of expenses or cost of goods sold, and any other kind of key metrics, maybe cash balance. If you kind of can look forward to a potential investment raise and show what cash outflow is going to look like. I think those are the kinds of things that you might want to show. So here's just 2, samples, again, with showing some numbers. Obviously, you have to show some numbers, but obviously looking at it in a graphic format is what we would suggest.
Great. And then that brings us into the home stretch. We have current status to review.
Current status and investment ask, right? So this is the very last thing, right? So where are we today, right? What have we done? How much money has been raised up until now? How have we used that money? How much traction do we have? Whether it's in terms of users or revenue or or viewers, whatever the key metrics that we may be wanting to look at. This is where we want to show it. And obviously, the more we've done with less money that's been invested to date, obviously the better off we're gonna look compared to others. But we want to put ourselves in the best light. We want to talk about timeline, right? We want to talk about how we've used funds to date and how we expect to use funds going forward. So here is our growth plan. This is maybe we would show, hey, this is what we've done to date. And this is where we expect to go, and all of this, right, has to kind of fit together with everything that we've presented up until now, right? So again, that customer acquisition strategy, the market opportunity, how we're addressing the market, how much money we're going to be earning in revenue, and how much we're going to need to spend in expenses to support that revenue. All of that has to tie together into this kind of the current status and ultimately how much we're looking for.
That brings us into you mentioned about the investment ask. How important would you say it is to predetermine exactly what you're asking for?
So this is one where I think this is one that Guy Kawasaki actually doesn't suggest you put this on there. We think to the extent that we have some good data and we know what to ask for, we should be putting it down on here, right? So the things that you'd want to put on here are the size of the round that we're going after, right? If we already have some terms, if we've already got an initial investor lined up, or we have a really good idea of what we think that the round is going to look like, we should put in those terms, right? We don't want there to be surprises down the line, like where an investor is thinking, hey, look, my investment strategy at this stage is a $3 to $5 million round, and we're looking for 20, right? Or we're looking for 500,000 or 1 million, right? So there shouldn't be any surprises. It should kind of fit the investment profile of the investor and what we're looking to do. What we've raised so far, either in previous rounds, whether it's through kind of seed financing or equity financing, you would want to jot this down here. And then kind of the thing that's really, really near and dear to my heart, the milestone spending and the milestone financing. We're really, really big proponents of that, right? Is looking at milestones, right? What are we trying to achieve? What have we achieved to date with the financing that we've received, which has really increased our valuation, right, over time? And what are we looking to do with the money that we're asking for today, right? What are the milestones we're trying to achieve so that and in many cases, this is a round, and we're going to be following this up with additional equity raises. What are the milestones that we're going to hit with this new round of financing, such that when we go after the next round of financing, that we're going to be able to do it at a much higher valuation because of the milestones that we achieved. And so, putting all that stuff into this kind of an action slide, right? A request for action, right? So in this case, we'd say, hey, look, we're looking to raise $750,000 seed round, right? At a valuation of $2.8 million. And then people can get an understanding of what that might mean in terms of the amount of equity that they're going to own, as well as understanding that it does fit with their investment profile or it doesn't. And then, what you're planning on doing with that, right? Key hires that you're planning on making, customer acquisition strategies and the cost to acquire customers using this, any kind of partnerships that we're trying to develop. This is kind of where we put it down as a as the final call to action, and hopefully people will be interested and want to take the next step and do a due diligence call with us.
So much great information, and one last step, of course, is the importance of testing it out. I mean,
yeah, and there's a couple other things that I want to add on here, and Oren, I'm not sure what kind of questions that we've received. I do want to save a few minutes for that. I think I don't think you mentioned it before, but to the extent that we're not able to get to your questions, feel free to please post them. We will we'll try to reach out to you directly and answer if we can't get to them. And also I think we'll be sending you this presentation as well. But I just wanted to touch on a couple final points here, right? One is now that we've kind of done the pitch deck and we've sent it out to investors, as we prepare to do the pitch, right? There's a couple things that kind of final I guess recommendations obviously you want to test it, right? Test your pitch deck. Send this out to people that are friendly to us. Practice your pitch. Pitch it to 10 different people or as many people as you can, both from a getting comfortable with the pitch yourself, as well as making sure that the message is received, right? And so if the listener can relay back to you what the message was in one sentence or a couple of sentences, then obviously you've done a good job in communicating the message. Other couple final things in the actual pitch itself. I always say, let the best pitcher pitch, right? Meaning I may be the technical person who has a great idea. I'm the main founder. Obviously, I want to pitch the company. But you know what? If I partnered with a very, very eloquent sales and marketing guy, and he or she can do the pitch better, let him do it. Let him or her do it. Know your numbers really, really well, because understanding the numbers, the questions are going to come up, even whether it's at that meeting or shortly thereafter if the investors are interested. Know your numbers really, really well. Approach your fundraising and like it's a job search, right? It's almost like I would say it's like a full-time position for one person on your team with regards to actually fundraising. So even as you're preparing your elevator pitch, as you're preparing your executive summary, as you're preparing your pitch deck, and then as you follow up after sending out the pitch deck and following up with all investors and meeting with them, it's a full-time job. So keep that in mind. And then the final thing, I mentioned this before when we were talking about the team, but pitch the company and pitch the team, not the product. Because again, the product is going to change, and we're going to be introducing new products, as we find out, as we gain success, and as we find new opportunities for us. The product is going to change. The team is what investors are investing in.
So much great advice. Thank you so much for your time, Sirk. Really, we have the question, our contact info on this last slide. So if there's any follow-up questions from anyone, please don't hesitate to call in. We're glad to help, and thank you for your time, Sirk. That's really such a high level, in-depth look at what goes into something so fundamental.
Yeah, and there's this is obviously an introduction. There's lots of places. Well, first of all, you can go onto our website, and we've probably done, I don't know how many presentations that you could probably look us up on our YouTube channel and find lots of presentations. There's obviously lots of places online where you can get examples of successful pitch decks, and so I obviously encourage you to do that. And then final thing, I'll just close by saying that if you're an entrepreneur out there who's obviously interested enough to listen to this presentation, that means that you are in that ecosystem, right, of startup entrepreneurs who are looking for potential investment from outsiders. We think the world of you and what you're doing. We encourage you to keep it up, and to the extent that we can provide any support in the future, then we'd obviously be happy to do that. So thanks again for your time, and and have a great afternoon.
Bye, everybody, and thanks again for attending.
Take care, everyone.
Thank you, John.